Do you want to short a market that's going up or down?
Do I look, you're the expert, not me.
So a stock market that closes on all-time highs, is that a
Yeah.
stock market that's going up or a stock market that's going down?
It's a stock market that has gone up, but I don't know if it's going to start turning around because it's already at all-time highs.
How many times does a stock market hit all-time highs? If you look back and say, okay, there was the all-time high, how many times does that happen? Once. There's one time that it was the all-time high, right? So if you want to make the bet that yesterday was that one time, then go ahead, short the stock market. My argument is that if you're playing odds, which is what we're doing as traders, those are bad odds.
Jason Shapiro returns to the show. He is the founder of the Crowded Market Report. You can revisit some of Jason's calls with me in my last interview with him, prior interview link in the description down below. We'll revisit some of his market calls, whether or not he still remains bullish in the markets overall, and what's keeping him awake at night as a trader right now. Thank you very much for joining the show once more, Jason.
Happy to be here, David.
You've been talking about China a lot on your own channel. By the way, I encourage people to check out Jason's YouTube channel. He gives great updates a couple times a week. So link down below. Jason, China stimulus is top of mind for you, was the message in some of your recent videos. So we know that China introduced probably the most aggressive stimulus package since the pandemic. And I think you told the audience in one of your videos that traders didn't like the last stimulus package that was given to American institutions in the great financial crisis, right? I mean, how do you feel about stimulus overall? And then we can touch on China in particular.
I mean, stimulus overall, this is really definitely since '08, this is what central banking has become. You know, we are never, ever going to have a problem again, ever. Because whenever there's a problem, the central banks come in and they just print a bunch of money in one form or another and make up new ways to do it if that's what they need to do. So that's what they do. And that is the game now, right? And that's all fine until it's not, is my point, right? And as long as it's fine, it's fine. But when things start to fail on the stimulus, that's when there will be a problem. We haven't seen that. China hasn't failed on the stimulus. The stock market is up like 30% since they did it. So as long as that works, you know, we're fine. My problem is that as a believer in the market being a discounting mechanism, and as a believer that participation is what helps the market to discount stuff, like you were saying, in '08, I was in the middle of that. People didn't like the stimulus. It was a new thing. They didn't understand it. They thought that it was going to be inflationary. They thought that, you know, it was like a socialist tactic. They thought all these bad things, and nobody liked it. And it ended up being the exact bottom of the market. And so now people's psychology has sort of changed where they're looking for stimulus to be the savior. And so the psychology of it has changed. So therefore, I would expect the reaction to possibly change as well. So now that people are believers that stimulus is the be all and end all that saves everything, I worry what happens if there is stimulus and it does not save everything. And like I say, there has been no proof of that to this point. The Chinese stimulus has worked. So there's nothing to worry about. But I think the important thing to look for is when one of these stimulus packages happens somewhere and it doesn't work. That's going to be a problem. So what's the next big stimulus? You know, the U.S. is not really in massive stimulus mode, but I would assume should things start to crater at some point, in particular, like in fixed income, which is already starting to crater a little bit. If they do come in and stimulate, and if that doesn't help, then I think we have a problem. So that's what I think you have to watch out for. I'm not predicting that that's what's going to happen. I'm saying that the market will tell us if that is what's happening. And if the market does tell us that that's what happens, then there could be a bigger problem coming.
Before we continue with the interview, I want to tell you about another way you can invest your Bitcoins and store them safely instead of using a traditional wallet or an exchange. Consider an IRA. Today's sponsor, iTrust Capital, is one such IRA that offers 35 crypto assets and the lowest trading fees in the crypto IRA space at 1% only. And being an IRA, it also offers unique tax benefits. If you'd like to get started and learn more, click on iTrust.capital/David in the link down below or scan the QR code up here. If you're over 18 and you want to open a new account with cash or roll over an existing account, you can do so using my referral link. And if you use that referral link, you'll get $100 in signing bonuses. Has the China stimulus package directly influenced your trades at all over the last 2 weeks?
In a way, it did. I mean, I trade my process one way or the other, but and I think I did a video about the yen, specifically about the stimulus, and if you were looking to fade the stimulus, that that the way to do it was to short yen based on the things that I look at, which was positioning it and market reaction. Um, and so I was shorting yen on the back of what I saw happen during the Chinese stimulus. I was looking for something to fade. I wasn't going to like short Chinese stocks because they were doing nothing but going up. I wasn't going to short, things that were going up on the back of that, like metals and all that stuff, but because they were going up. But the yen failed on that, and that's what I shorted. So in a way, it affected my trading.
You talked about this in one of your recent videos called Why the Fed Can't Afford a Recession. The Ponzi Scheme Continues. And if I may summarize this video, I think you basically said that you use China's stimulus as an example of something that works short term but could create problems long term for the financial system. What kind of problems long term are we talking about here?
Could create, right? Again, if the stimulus doesn't work, then you're in trouble because then what is going to work? I guess people will argue more stimulus, right? Maybe, but I think at a certain point you are pushing on a string, so to speak. Um, if you follow the logic of that, it's based on the fact that there's a limit to everything in the world, including how much money can be printed by the United States of America. I don't know where that limit is. I don't even know if we're anywhere near that limit. Okay. But when we get to that limit, the market will tell you because the market will say, you can print all these dollars and stimulate if that's what you want to do, but we ain't taking them anymore. Right. We're not taking your bonds anymore. We're not taking your currency anymore. Right. So printing more at that point doesn't help. It only hurts. That will be the turn. We are arguably seeing that in bonds here. Ever since the Fed cut by more than expected, the bonds have gone straight down, right? Because clearly all this stuff is inflationary, um, and there has to be something. There's no free anything out there, including and especially in economics. If you're going to print a bunch of money, it's going to be inflationary, you know? And this is what people were scared of in '08 and why they weren't buying into it and why they were bearish. But the difference was that I think in '08, we were coming off of a major financial crisis, right? Which was hugely deflationary. We ran out of money. We ran out of liquidity. So they provided liquidity to stabilize. We don't have that problem now. There ain't no shortage of money out there now, right? And we're not in any kind of deflationary environment now. We're arguably still in an inflationary environment. And yet they are printing and they are stimulating. So I think that's very different than what we had in '08. This is inflationary at the very least. And listen, that doesn't necessarily mean that it's bearish the stock market. It could be, but it doesn't necessarily mean it. I mean, stocks at the end of the day are financial assets, just like anything else. And if the price of assets go up, then there's no reason why the price of stocks can't continue to go up in an inflationary environment as well. It's just money, more money out there, and that more money has to go into something. Stocks can be one of those things. So to me, if you're going to be bearish on this whole thing, I don't think that stocks are necessarily the place to be bearish. I would be bearish bonds.
You'd be bearish bonds. Okay, so can you comment on that? Why are you bearish bonds right now? Yields are going to go up because of inflation.
Yes.
Okay. The inflation that we've seen so far, that's been on a steady downturn. At what point would you say, look, it's starting to get inflationary now? What are the triggers for higher inflation in your mind?
I think it's already getting inflationary, but the number one impact I have learned or have been taught is energy. And energy has not gone up. Energy has been going down for quite a bit, right? Crude oil has been going down really since September of 23. I personally believe that that has turned now. I'm long energy here. Um, and if that in fact ends up being correct, then you're going to get inflation. You know, energy is the number one impact on inflation because energy affects everything. It doesn't just affect what you're putting in your gas, obviously, it affects everything, shipping costs, manufacturing costs, you know, everything. So I think energy is the thing to watch. And I happen to, this is outside of my macro view, I happen to be long energy here. Um, and if that keeps going up, you're going to have an inflation problem. Yes.
You made a couple of videos, I think, in the last couple of weeks talking about heightened geopolitical activity or risks in the Middle East. And actually, earlier this month, the VIX spiked twice, actually, in late September and also early October on the back of Israel and Iran escalations, and also Israel and Lebanon and Hezbollah. Are you following that? Does that impact trading or is that just noise for you?
Noise.
It doesn't hurt the long term thesis at all. I mean, if things escalate, couldn't the stock market sell off?
Sure. But I'm not going to sell stocks, short stocks on all-time highs just because there might be some Middle East escalation. Does anybody know that there's not the possibility of Middle East escalation?
So it's been pretty much priced in. Actually, let's talk about that. You're not going to short stocks at an all time high. That was another subject of one of your videos. Why not? Why is that just generally a bad practice?
Do you want to short a market that's going up or down?
Do I? Well, look, you're the expert, not me.
Well, tell me, do you want to be short a market that's going up or do you want to be short a market
Well, the,
that's
the issue is I don't know if it's going up or down, right? I can't tell. I
but
can't
if
tell you
you
where it's
knew, would
going.
you want a short one that's going up or short one that's going down?
I want to short when it's going down.
Okay, so a stock market that closes on all-time highs, is that a
Yeah.
stock market that's going up or a stock market that's going down?
It's a stock market that has gone up, but I don't know if it's going to start turning around because it's already at all-time
How
highs.
many times does a stock market hit all-time highs? If you look back and say, okay, there
Right.
was the all-time high, how many times does that happen? Once. There's one time that it was the all-time high, right? Here's the all-time high this day.
Yeah.
Okay. The
Yeah, I
market
get it.
went
Yeah.
down. Okay. It's one time.
Hmm.
So if you want to make the bet that yesterday was that one time, then go ahead, short the stock market. Okay. My argument is that if you're playing odds, which is what we're doing as traders, those are bad odds. Let the market tell you. Well, you have to catch the exact. I've been saying this for 2 years already to people. I've got how many videos out there?
Yeah.
You know what I mean? And it's like, let the market tell you something first. Do you have to short the all-time high tick? Because if you've been trying to short the all-time high tick, you've been getting crushed, right? Because it keeps making new highs, and therefore you keep losing money. I just don't understand why people do that. I really don't understand why people do that, unless they just like to lose money. It's just a horrible odds trade. Why short anything that closes at an all-time high when the market can only beat an all-time high once? You're guessing you're getting that one day. It's a terrible bet.
The projections for this momentum to continue are more in favor right now for the Bulls than the Bears. Meaning, I think just based on what I'm reading, more of the Wall Street firms are bullish. Goldman Sachs, for example, updated their S&P 500 outlook to 6,300 points. Does that signal to you that that one side of the trade is more crowded than another
I think
when
it's
more
getting
of the
there.
street?
I think it is certainly closer to there than we have been for the last 2 years. No question about that.
Right.
I am not looking to get short here, which doesn't mean it can't go down, but I am not looking to get short here. I could see post-election um, getting short somewhere in there. If the market were to continue to go up, you know, it climb the wall of worry of this election fiasco that's coming out, continue to climb that wall of worry, get through the election. Now there is no more worry. Now they go in because now they're going to believe that the Santa rally is going to come and people see that as a free money. I could see shorting into that. I could see getting short sort of in November type of thing, um, for me. But until then, I don't really have any plans to look to be short the stock market.
And I know
Which I'll say again doesn't mean it can't go down just because Jason Shapiro doesn't short it. You know what I mean? But
I understand. I mean, we talked about this before that you don't look for levels. It's not like, oh, the S&P's hit 6,100, it's time to short. You look at when the trades become crowded. Can you just recap for the audience one more time, exactly what indicators would point to you that it's too crowded on the bull or bear side, whatever side it happens to be?
I spend a lot of time looking at the commitments traders reports, which just the positioning in the futures markets for these things. Now, it is showing somewhat crowded in the Russell. If I were to be short anything, I would be short Russell here if I were looking to short the stock market, which is also something that is not on an all-time high, by the way. The Russell's lagging. It's lagging by quite a bit, right? That's something that I could see somebody wanting to short. Okay. The market is saying, first of all, it's showing crowdedness there. And second of all, the market isn't going up while all the rest of the stock markets are going up. So the market is giving you a little bit of a tell there. So if I were to short something, I would be short the Russell. Um, but that's how I do it. I look at for it to be massively crowded, and then I look for the market to confirm that fact. Because markets can get crowded, they can get more crowded. They can stay crowded for a long time. I'm not going to do it just because it's crowded. I need the market to confirm it first in some way, shape, or form.
Sectors in the S&P that have performed well in the last 3 months: consumer staples, utilities have outperformed the S&P 500. Energy has lagged, as you know, well, for obvious reasons. The oil price has been lagging. Tech has been outperforming. When sectors start to outperform when they haven't really before, like utilities and defenses, for example, is that an indicator of anything for you?
It's not really for me. I mean, it's pretty amazing
Yeah,
historically what the utilities have done here. Um, you don't see utility stocks, go up 70, 80% a year very often,
sure.
or whatever they're up. Um, it's been pretty amazing, but I think in a way, it just goes right back to that AI story, right? The whole AI taking over the world and needs all this energy and needs all this electricity and that whole thing, right? I think that's probably what it's coming down to.
Sorry, how does the AI narrative play into utilities?
Well, AI requires a hell of a lot of electricity, more than we
Okay,
have. So that's growth for utilities.
I
Utilities is
see.
not something that has huge growth, right? And in this situation, it seems like that would create some big growth for those companies.
All right, well, let's finish off some trades. By the way, I don't think you and I spoke after right after August, early August. Yeah, I don't think you were on the show then. So just to recap once more, early August saw a huge drop in the S&P 500. It's obviously since recovered. Asian markets saw their biggest daily decline since the great financial crisis. I believe circuit breakers were triggered in Korea. And a lot of it had to do, I think, with the reversal of the yen carry trade when the Bank of Japan raised rates. People, when the capital markets flooded back into Japan. That's one theory I've heard. Okay, what was your initial reaction to that 1 day drop or a couple day drop? S&P went from, let's just take a look at my screen here. When you see a huge drop in a day like this, as a trader, doesn't matter what the reason for the drop is, or maybe it does matter, but it went from basically, yeah, 10% over the course of a couple days. How do you react to something like that?
I don't. I mean, it depends, what trades I have set up and what trades that I think offer good risk reward. I didn't have anything in stocks at that time. I wasn't short stocks at that time. I wasn't long stocks at that time. Um, we had some currency trades at that time that worked very well.
Hmm.
Long Swiss franc and long some safety stuff like that. The commitments of traders did was set up to be a buy in yen at that time, but I unfortunately missed the trade for reasons that are a combination of both how my process works and how my mind sometimes fails me. But certainly the commitments of traders did give a signal that the yen was ready for a move like that. I didn't catch it in yen, but I caught it in some other places. I caught it in Swiss and stuff like that. So that's fine. Um, but I mean, did it mean anything? Look where we are now. As it turned out, it was the greatest buying opportunity of the year, right?
Absolutely. And when something drops like that, how do you make the decision to get back in or just stay out and see what happens? I mean, presumably, if you were to look in hindsight, it's 2020, but at some
Sure.
point, did you not have the thought it's time to buy the dip?
I always have that thought, but I don't do anything about it unless my process allows me to do it. So it didn't show that people were massively short stocks at that time, which is what I need to get long.
Mm.
So there's nothing that I did in the stock market at that time.
Okay, so you have to see that people are overwhelmingly short in order to buy dips. If is that
For
correct?
for my process, that is correct.
Would that not, though, signal market momentum more to the downside if people are overwhelmingly short? I'm just trying to understand how that process works.
If people are overwhelmingly short, then to me that indicates that there's a good chance the market is going to reverse and go up because
Okay.
because they're already short. So if they're already short, then what's their next move? They have to get out of those shorts at some point, right?
Yeah.
So the market starts to go up and they get squeezed out of those shorts, you know? And it's not necessarily predictive. It's just a risk reward thing. If it happens, then there could be a big move the other way. That's really the only game I'm playing. I don't think that anything has any ability to predict, but this does help in getting risk reward in your favor in terms of if it's right, you know, you can make a lot of money. And if it's wrong, then you just lose a little bit of money. And to me, that's what trading is.
Let's take a look at another asset that's been continuously reaching new all-time highs, gold. Let's just take that as an example of how you would trade something like this. It's currently at 26.22. Take a look at my screen. It was at just over $2,000 at the beginning of the year, which translates to a roughly 27% increase year to date, which is very good for an asset like gold. Okay, is it overbought right now, or do you think it has more room to climb? How do the futures and positioning look for this asset?
It's crowded. It has not gotten to what would trigger a level for me, which it has to be hugely maximum crowded. But I would not. This is not something I could be long. That's for damn sure, right? Because they're all crowded. Silver, gold, platinum, um, are all crowded, and the dollar is the other way. Like I'm not short these.
Hmm.
But I'm short the Australian dollar, which is probably pretty correlated to these because the Australian dollar is at max crowded levels. So sometimes I don't catch it in one area, but I'll catch the same sort of correlated trade in another area. It doesn't matter to me where. I Again, this is all about me and my process. Everyone has a different way of going about things.
Sure.
For me and my process, I could never be long these things up here. But you know, the same was true in April. I was long the stuff from late last year, but once we got to April, you know, the stuff went neutral. All the positioning went neutral, and I would have said the same thing. I can't be long here. I didn't have to be. I wasn't short, and I wasn't looking to get short because it was
Right.
neutral. But I couldn't be long there. It's gone up since then. You know what I mean? It's gone up without me. You know, it's
And
not my trade. I have certain trades that I do, and that's not my trade, right? But
yeah,
I could never be long that stuff here.
I'm just overlaying this with the S&P 500 here, and when things like the gold and the S&P has moved, well, they've moved together in tandem over the course of the year. When things move up or down together, how do you decide, which assets to be overweight in and which to stay out of?
The ones that are the most crowded shorts are the ones I'm long, David. And the ones that
Okay.
are crowded long are the ones I'm short. That's it. I mean, these things are all correlated because there's money creation going on, right? So
Mm.
the more money that's out there, the more prices of things go up, right? Milton Friedman will tell us this, right? All you got to do is read Milton Friedman, right? Who's a pretty well-known economist. Um, he'll tell us this. It's all a monetary phenomenon. So they're printing money everywhere. They're creating money everywhere. There's more money out in the system, so assets go up.
We talked about the Russell and gold. Anything else that you think is overcrowded?
You know, the energy short has been overcrowded, which is why I'm long energies here. The dollar short, in particular, in things like Australian dollar and New Zealand dollar, they got too long of those things, which is why I am short the Australian dollar here. Um, Fixed income, amazingly. Um, in particular, the positioning in the very short end, the 1 month sort of contracts, um, had people very short all the way up until the Fed cut 50. And when they cut 50, people got mega long right there, right on the high. People got mega long in the week leading up to the week of and the week after the Fed announcement. People got mega long that stuff. So I think fixed income is a very dangerous thing to be owning here too.
Okay,
Which all
fair enough.
coincides, by the way, because if fixed income goes up, arguably, I'm sorry, if fixed income goes down and U.S. rates go up, and particularly at a time when people were expecting them to go down a lot, then the dollar theoretically should go up, which leads to these other currencies going down, um, which leads to the metals not necessarily being the greatest investment, and energy really doesn't have very much correlation to the dollar, so that's in its own right. I think if you want to bet on the inflation play here, which probably ain't a bad bet, the place to do it is in energy. Gold has been a great place to do it, and I wouldn't discourage anyone. You're not trading my process, so you can be long gold here, right? I wouldn't discourage that, but I would prefer energy over metals from here. And it's not like I've been saying that. I only started saying that 3 weeks ago, right?
Yeah,
Um, and it had nothing to do with the Middle East war. It has nothing to do with any of that, right? Now, clearly, that's going to affect the path of the whole thing, of course, right?
right.
But and again, we've had times when the Middle East war broke out, got worse, like in April, and crude went down on the back of that. Went up for maybe a couple hours, and then it just went straight down, right? The difference is then people were not mega short these energy markets like they are now. Now they are mega short the energy markets. So now I believe the chances of them going up are much higher than they were in April. I wasn't long in April when the stuff escalated. I also wasn't short. I was neutral, that stuff. This time I'm long. I was long before the whole thing happened in Israel last week. But and it had nothing to do with the Israeli thing. It had everything to do with the fact that people were just way too short, you know. And if we really look at it, the energies didn't really go up that much on the bombing. In fact, they sold off on the bombing, right? Um, because that's what they did last time, and that's what people want to do again. So the day of the bombing, it went up and then came right off. The day after, with all the rhetoric, it went up and came right off again. And people were just selling more into it because they wished that that's what they had done in April. So they did it this time. They learned their lesson. Oh, well, when this stuff escalates, it all is a bunch of crap. So why don't we just sell this stuff? Okay, well, they did that this time. And this time they're getting burned trying to do that because, again, that's how markets work. You trade last time, it doesn't work this time if you're trading it last time.
Let's take a look one more time. So we talked about bonds. Let's take a look at my screen one more time. I'm just using Nvidia to illustrate tech stocks overall. I know different tech stocks have different charts, but it's been on a tear all year up until June, and then it's just traded sideways since June. When something that has rocketed up basically in a vertical line starts trading sideways for an extended period of time, what does that indicate in terms of how crowded it is?
I don't necessarily think that it indicates how crowded it is based on the chart pattern. I mean, to me, I'm not a chart guy. If I
Okay.
were a chart guy, I would be extremely bullish that stock.
Hmm.
We had a guy in our Discord today who's actually real good at charts. Put up a chart of the S&P at new all-time highs yesterday, and say, if your chart guy is saying that he's bearish here based on the charts, then what you need to do is get a new chart guy,
Okay.
right? And the charts aren't right all the time and all that. But if you're bearish an asset based on charts, all you forget about fundamentals. If you're saying that you are a chartist
Yeah.
and something is at an all-time high, and you're saying that that's bearish, well, then you're not a chart guy.
I'm curious if you zoom in, if you start applying some technical indicators, does RSI, for example, or Bollinger Bands, do those things indicate how crowded a trade is? Can you
I don't
draw
think
a
so.
conclusion based on that? No.
I don't think so. No. Positioning is positioning. Price is price. Sometimes things that go up a lot get crowded to the long side,
Hmm.
and sometimes they don't. And what you want to be, obviously, is in the ones that are going up that are not crowded. Will perform much better than the ones that are going up that are crowded long, right? So how to determine what's crowded and what's not crowded on individual stocks can be tough. There's not really some great data in that. Um, I kind of feel like because of the math of it all, they almost can't be crowded in Nvidia because asset managers almost always have to be underweight relative to their benchmark in Nvidia. Because if they weren't, you know, then too much of their portfolio would be in one stock, and they're not allowed to do that, right? I mean, how much is Nvidia in the S&P 500 these days? It's some big number that these people wouldn't even be allowed to have on. So by definition, they're almost always underweight Nvidia relative to their benchmark.
So the last point I want to bring up is how to if you trade economic data at all and how you would do that. For example, I'll just bring up an example. The jobs report that came out last Friday, yields shot up on that news because the jobs report beat expectations by a large margin, 254,000 jobs added instead of 140, which was the expectation. Now, as soon as that report came out, the CME Fed Watch Tool projected uh, less aggressive Fed rate cuts over the next year. So yields shot up. The entire market expectation changed for how many cuts that Fed is going to do over the next coming months. Now, does that impact your positioning at all? When data changes people's outlooks completely, just on
When
one
their
report?
outlooks change and then that shows up in the positioning, that will start to affect me, right?
Okay.
But it's funny because you're right. The number came out stronger. Bonds went down. The expectations for the next Fed cut went down.
Mm-hmm.
Yet right off the bat, stocks went straight up.
Yeah.
I thought that stocks were only going up because we were expecting the Fed to cut rates more. So why, or at least that's what I was told. So why did stocks just go straight up? It's not even like they went down first and then went up. They went straight up on the back of
Right.
that.
Right.
Why was that? I don't know. Except that it's a bull market. That's the answer. It's a bull market. And you know, I don't think it's relying on rate cuts. I've said it before to you probably and in
Yeah.
many videos. I think that they're insane personally that they're cutting rates. I think it's insane. I don't see any weakness in the economy. Um, I go to airports, they're full. I go to restaurants. I've said this for 2 years. They're full, right? Everything is full. Okay. Where is there weakness in the economy? I don't see it, man. I don't see it. You can take one employment report comes out and it's 1/10 lower than expected. I mean, these are rounding errors. These are within the expectation of error, right? Um, I don't see where the weakness is. I think these people are out of their freaking minds, personally, and that
So
doesn't that they won't cut rates. Okay, it just
so
means
when everyone sees the same thing as you and everyone thinks that the economy is great and everyone starts to think that the Fed is mad for doing what they're doing, that's when you would start to take profits.
that's when we can start going the other way.
All right. Good. Well,
And
let's
we're
follow
getting there. As you said, we're getting there. I watch your show. Your show has traditionally been, I would argue, 90% mega bears. Okay.
up.
No, it has. It
You're
has.
not wrong. You're not wrong. Yeah.
And now I think that that's changing. I'd say it's closer to 50-50 at this point.
It's interesting.
You still got your perma bears on there,
Yeah.
who, quite frankly, I don't even know why you bring on there anymore, but whatever you do, what you do. But there's a few of your perma bears on there, still, who are still making the same argument because these are people who refuse to admit that they're wrong. And if they were managing real money, they would have blown out by now. But you are definitely getting some more bullish people on there. Would you agree with that?
Yeah, that's true. But I've also been looking for more bullish people as well
Oh,
for
I
new people
see.
to interview. So it's kind of, but
That's a great piece of information that you just gave up. Thank
this
you.
this is yeah, because you know what? Because the audience sentiment has turned more bullish as well, and the
Okay,
bears are
well
starting
that's
to get more
interesting.
hate.
Well, that's
Yeah,
interesting.
and I'll tell you what I've been noticing on my show is that some of the bulls who called it right all year, they've started to get a little more cautious. I'm not saying they've turned bearish. That's not what's happening. They've started
Right.
to be a little more cautious in their positioning. Some of the bears are starting to become more neutral, and then the perma bears are always bearish.
Yes.
Um,
If you go
So
back to the very first interview I did with you,
yeah,
which was very close to the low in the stock market, and I was super bullish, and I was telling people a recession was no freaking chance, and blah 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 blah. You look at how much hate I got in the comments on that, right?
yeah.
I mean, people were ragging into me. This guy doesn't know what he's talking about. He's out of his mind. We're about to crash. The world's coming to an end. Blah 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 blah, which I thought was great because it made me feel even stronger that I was going to be right. Um, I don't think that that's the case now. I don't think that the Bulls get that anymore. So that's definitely a change. And there's no question that that's a change. Now it's just a question of the momentum has to start running out. And I think we're close. I look, don't get me wrong, I'm not long the stock market here either, other than, whatever, my 401k and all that crap. But like in my trading portfolio, I am not long the stock market here, right? Um, because the tape doesn't allow me to be long, well, I was going to say it doesn't allow me to be short because it closed at an all-time high, but
Yeah.
I'm not long because it's not like super crowded short or anything either, right?
Right. Right. Well,
But
let's.
I believe we are getting there. I think that your point is very valid. We are getting there, and that's why I think that maybe once we get through this election, which is everybody's last fear, once that last fear is gone, then it's like I said, then it's free going all the way to the Christmas rally, right? Will be, I think, how people interpret that. And if they do that, then I will really be looking to get short.
So let's follow up after the election and see what happens. Because do you see any scenario at all? And I'm not trying to make a bearish argument here, but do you see any scenario at all in which the election may surprise markets? I mean, it doesn't matter who wins, right? At this point, I think the markets are priced out scenarios, but anything that could happen that could throw people off. I mean, we know Harris wants to raise taxes. We
Is
know
there
Donald Trump
anything
likes
that anybody
tariffs.
hasn't already discounted in, right?
Yeah.
They know kind of the Trump story, they know kind of the Harris story, and they even know the story of it could just be a shit show, right? We might not find out who wins the election until a few weeks after, right? They,
I guess the unknown will be who controls the House with the Senate, because if we have a Republican sweep and or Democrat sweep, the people I've talked to on my show have said either scenario would probably not be great. Markets like government to not do as much as possible.
they do. The other thing would be, and this is a long shot, I don't think people have priced this one in. If we go in heading into the election and Trump is ahead in the
Yeah.
polls,
Yeah.
and then he loses, okay?
Mm-hmm.
Then maybe we can get a little revolution going. Maybe these people will freak out. You know what I mean? Maybe they'll bear arms and they'll freak out. I
Mm.
personally don't think they will. I think people like to talk about doing stuff like that, but when it comes down to actually doing it, I don't think they follow through.
Yeah, the bearing arms thing aside, but that's a good point. Okay, so if the markets or the polls, or even if you go on the election betting sites or
Right.
whatever, if they're
Right.
all expecting a Harris win the night of or a Trump win the night before, and then it goes the other way, that could surprise markets, I think.
Yes. Yes. But
Yeah,
I think the big change will be, you know, I think it's the Trump side, right? Because
yeah.
the Trump supporters tend to be a little more, I would argue, I don't know what the right word is, but um, if he were to be winning going into it and he actually loses, given the history of the belief that the elections are rigged against him and all that, then we could start seeing maybe a little bit of unrest, you
Yeah.
know,
Yeah, I
um,
understand what you're saying.
and that could certainly, that could certainly affect. I personally am not a believer that the elections affect. I mean, clearly the path and the volatility around it is affected, but the long-term movement of the stock market is not going to be, in my opinion, affected by who gets elected. Because
Interesting.
that's really just how much money is out in the system. But that's what pushes these assets up. And I don't think either one of these people is going to reduce the amount of money in the system.
Good stuff, Jason. Where can we follow your work?
Crowdedmarketreport.com.
Oh, I will put the link in the
And
description down below.
we're on YouTube where we do a bunch of, videos for free, and we got all kinds of stuff. We have I don't know whatever. Just go on crowdedmarketreport.com or go to our YouTube on Crowded Market and on Twitter, and you can see all the different places that you can get stuff from us.
Good stuff. Thank you very much. We'll put the links down below. Make sure to follow Credit Market Report and their YouTube channel. Great YouTube channel, by the way. I mentioned it several times. Check it out. Thank you, Jason. We'll speak soon.
Thank you, David. It was nice talking to you.